Tom Halverson, wonderful to have you back with us. We want to use today to get you to help us think about two things. One is the performance of the U.S. economy, and then we also want to get your perspective on the outlook for the farm economy looking ahead into 2021.
Great. I look forward to it. We have new data today, which is always an exciting opportunity.
Let's bring up the first chart, and it shows the performance of the U.S. economy from a growth standpoint for all of 2020, including the fourth quarter number that was just released, which shows 4% growth in the fourth quarter. When you look at this and the extreme volatility that is indicated here, what comes to mind and what are you thinking about when we look ahead?
This is the biggest contraction of the U.S. economy since the data has been recorded, starting in 1949. So this is a monstrous contraction. And now the economy is trying to figure out how and when and what speed it's going to unwind like a giant spring to get back to a more natural level of growth. But that's a very savage contraction.
How much pent-up demand do you think is embedded in the economy right now if we can get vaccines right and the public health situation stabilized? What are we looking at?
Well, I think it's the if we can part of your question that's the most important. I've been saying consistently, I still believe it to be true, that the way through the pandemic to back to a more normalized growth trajectory for the macroeconomy is to eradicate COVID-19, right? Because that pent-up demand, that bounce-back phenomena, requires that we have gotten vaccines out and into everybody's arms and therefore create the conditions in which we no longer have to follow all of these safety protocols in exactly the same level of intensity as we do now and as we have for so many months. And when those conditions are created, then that pent-up demand, particularly in certain sectors of the economy, can come roaring back.
Let's zoom out a little bit, take us to the next chart here. And this shows GDP by year going back to just before the Great Recession. And you can see the decline of 2.5% in that time against the full year decline for U.S. output in 2020 of 3.5%. Is this a really bad result, or is it bad but not nearly as bad as maybe it could have been when we were looking at this at the outset of the pandemic?
It's yes and yes. It's a really bad result. Everybody here, unless you're 10 years old or less, remembers the experience of the 2007, 8, 9 contraction, which was an extremely difficult and challenging one for the entire country and so many of our fellow citizens. This one is worse. It's worse in a variety of ways, including the fact that it happened even faster and more savagely. So contextually, it is a very, very significant contraction.
Let's pivot now to the second topic, which is just to get your take on the sort of the status and the outlook for the farm sector here in the U.S. looking ahead into 2021. This chart shows an ag commodity index that's managed by S&P. You can see here that in the second half of 2020, it's actually gone up quite a bit. How important is this, and what does it portend and signify for the farm sector?
Well, this is a big deal for rural America, big deal for agricultural producers and agribusiness, which is a big portion of the CoBank customer base. 2020, when all the data comes in, we're going to have seen $46 billion in transfer payments from the rest of the taxpaying citizens of this country to the agricultural production complex, which is a very large number. We're therefore, between that and normal market activity in the agricultural economy, the net farm income number we expect to see will be the second highest on record, which is an extraordinary result. I wouldn't have expected, if you'd asked me 6 to 9 months ago, if the fundamentals would create the conditions in which those prices would move up nearly as substantially as this graph indicates that they have. And so despite the headwinds in the macroeconomy caused by COVID-19 that we just talked about, what we've got for now for agricultural producers and for agribusiness, if you are exposed to agricultural commodity prices as the product that you're selling, either originally or processing it or what have you, you're in a much better situation. So for agricultural producers, and therefore indirectly for rural America, this is a big tailwind that has blown up here in the last few weeks and several months. That's pretty vigorous and is likely to be sustained for a while, and that's good news.
Commodity prices are an important indicator for the farm economy. There are a lot of other ones. However, let's go to the next chart, which shows debt to income for U.S. farmers over a multi-year period here going back to 2000. It's come down actually over the last couple of years. Talk about this chart and what it shows.
Well, if you showed the components of this disaggregated and showed the debt numbers just on a graph by themselves, what you'd see is they've been going up on a steady basis over a long period of time. What you'd see if you showed the income numbers would be more volatility, but as I just described, 2020 was a big net farm income year, and therefore what's actually happening here is this is a proxy for sort of cash flow, if you will. So while debt levels on an absolute basis are relatively high, interest rates are exceptionally low. So that if you carry debt to finance your operation, the cost of servicing your debt is at historically low levels, and your income is very high. So it's a reassuring picture, and if the tailwinds of higher commodity prices are sustainable for a period of time, that will of course sustain land values as well, which is the collateral against the vast majority of the debt out there in agricultural America. So it's a pretty optimistic story.
Do you expect a substitution effect in the coming year where higher income resulting from higher commodity prices will essentially replace the federal government support that the farm sector has used or leveraged?
Yeah, there can be a substitution effect here. If those transfer payments are going to go down and mean revert to more normalized levels, you'd much rather have to adjust to that in the conditions that pertain today than the conditions that pertained a year ago, when you would have gotten hit with a great reduction in transfer payments and very low prices for commodities. So the agricultural economy is in a position of strength to weather that transitional budgetary change, if you will, that I expect us to see over the next 1, 2, 3 years.
Let's bring up the last chart, which is from our knowledge exchange division here at the bank. It paints a really interesting picture of what happened to food demand in the U.S. over the course of 2020. And you see a huge spike in grocery consumption, a huge decline in restaurant expenditures, not surprisingly, in the wake of the pandemic. Just talk about how violent this change was and what the ag economy had to deal with through this period.
I am just unbelievably impressed with the resilience, the flexibility, the adaptability that has been demonstrated by the entire U.S. Food complex, from the producer all the way through the processor and so forth. That's billions and billions and billions of dollars of change, right? And back there in that period, March and April, when people were in the middle of it, they felt like they were drinking from not the fire hose, but from the Hoover Dam, right? It was just unbelievable. But it has leveled out in a completely new place, and the entire supply infrastructure of this country didn't skip a beat, right? We had some more pain in some sectors than in others, but we reached a new equilibrium in a really short space of time. Everybody can get what they want, right, at the grocery store. Prices haven't gone completely dislocated on a sustained basis. So it's an amazing demonstration of what the agricultural complex in this country and the food production complex in this country can do in distress.
Really interesting to hear your comments today, Tom. Thanks so much.
Thank you. Great to be with you.